Yes.
Great that you're here. You and I are both wearing Jawbones.
Yes, we are.
Yeah,
Fitbit is their arch competitor.
Wait, you've got the new one. Look at you all fancy.
And I will be honest with you, I'm not delighted by it. But we can talk about that later. Fitbit is a remarkably profitable company.
I flipped out when these numbers came out yesterday. When the filing came out and I got to the income statement, can't believe these numbers. This is a huge bit. I profiled these guys about 4 years ago on Bloomberg West, maybe 3 years ago, and it was a couple of guys, literally 2 guys, and a room full of a bunch of other sort of engineers, and I think they hired a part-time PR person, and I went for a walk with the CEO. Well, since then, this has become a giant business. We were talking during the commercial break. You were saying that they're doing more than $1 billion in run rate. Let's just look last year alone. $745 million in revenues last year, selling these little plastic things that people are sticking on their hips or their bra straps or wherever people wear these things, and massively profitable. I mean, gross margins of about 48%, profit margins, EBITDA, adjusted EBITDA, but I think adjusted EBITDA is fair because the stock options and stuff are not a non-cash charge. Adjusted EBITDA profit margins of 28%.
Same as GoPro.
Fantastic numbers. I think GoPro is probably a pretty good comp here. I mean, who knows?
Yeah,
what
GoPro has an adjusted EBITDA of 28%, and GoPro is almost a $7 billion company. That gives you a sense of what Fitbit might be.
Present market value.
Present market value, yes.
But Eric, as you pointed out, they're spending a lot less money on R&D than GoPro is.
Well, yes, and again, if we're going to use GoPro as a comp, because there aren't many places to turn to. Can't really compare it to Apple.
Well, I think you can compare it to Garmin. So Garmin has a similar business. They mentioned Garmin in their S1 filing. Garmin, we don't think of Garmin.
Garmin is a much more similar business. Yes.
And Garmin's based in Kansas City, not Santa Clara. So I think we don't think of it as one of the leading tech companies in the world. But it is,
though.
But it absolutely is. It's based in Kansas City. But Garmin has a similar business. They're doing about $150 million in fitness wearables. These guys are so much bigger. They say in their S1 filing, they quote an NPD report saying that Fitbit has 62% market share of these devices.
Wow. Well, isn't this a kind of, right at this moment, Apple Watch is launching, Rick Ryder just had one on, Samsung has a new smartwatch. This is the moment when Fitbit is about to face a whole new onslaught of competition.
Yeah, and then they cite that in the risk factors in the S1 filing. But these guys have faced a few over time. It's interesting. They mentioned in the S1 filing.
They've faced competition from Jawbone and other startups, not from
Adidas,
the most powerful companies.
And they mentioned Under Armour. And who they don't mention? Nike.
Apple.
Because Nike was in this space and left.
And they have exited this space.
And so I think that they're doing remarkably well in this business. We knew that from sort of the mind share that they have. When people describe these fitness trackers, you probably have had this experience. When people see the thing you're wearing, you say, "Oh, is that your Fitbit?" No, it's the competitor's version. They have less market share.
Well, Fitbit has serious market share. One thing that also caught me in the S1 filing, they aren't saying, they don't even know what they plan to do with the proceeds of this IPO. Maybe some of the VCs will cash out, and maybe that's the purpose. But
so they're honest?
Yes.
Because how many companies say they know what they're going to do with the proceeds of the IPO when it's really go to the bank? Right, so
a lot of people come out and say they've got investment plans, expansion.
They don't even say it's for general corporate purposes. Right. They say, we don't know.
Well, they need to cash out because Apple and Samsung are about to take them on head for head.
We'll see how they do in this. I think they've done remarkably well focusing on their knitting, and that maybe the market, I'm sure they say, but maybe it's true that the market gets bigger as these new entrants come in because people start to think more about health and fitness with these devices that help them do so. And the technology advantages that Apple and Samsung have, Fitbit's already exploiting.
Cory, thank you, sir. Cory Johnson, Bloomberg West editor-at-large, Jawbone Wear for the time being.